It is the 1st of November, so as usual on the channel here, what I do is in this video we look at the monthly candle closes to help us determine what could potentially lie ahead for the month based on these monthly closes. So let's dive straight in. If you like these kind of updates, please smash that like button to get it out to more people. The YouTube algorithm just loves those likes. So if you can, just click it, make it blue, and then we get this video out to more people. If you haven't subscribed yet, click the subscribe button. If you want to get on my email list, first link in the description down below. That way I can send you an email every time I upload a video. For the rest, let's get straight into it. So let's start out by looking at the Bitcoin monthly historic returns to give us a bit of an idea what happened last month. So you can see the month of October closed for plus 5.56%, which is green, which is very much in line with the historic track record of Bitcoin's performance in October since 2013. Now, it wasn't a crazy October month where, you know, we saw 30, 40, 50, 60% like we've seen in the past, but it was looking pretty bad at the beginning of October where we were deep in the red, and it managed to turn around and create a mini October and close in the green. So that is nice to see. So you can see still, even though looking at these historic returns is no guarantee of what happens, there does tend to be a pattern. Like, look at September, it is mostly red. Look at October, it is mostly green. Now we're looking at November. You can see here, in the early stages of Bitcoin, it was mostly green. Now we have had some red in 2018, 2019, and that was the previous bear market, right? So that red was there. 2020 was a really good November here with plus 40%, and that obviously was the start of the major bull market. And 2021 last year was negative 7.11%, which was also pretty much the all-time high of Bitcoin. That was the very peak of the cryptocurrency bull market in November last year. So we are now a year out in November since the previous all-time high. We're closing in on that level, and it's going to be interesting to see what happens here in November. Is it going to be green like November tends to be, or are we going to get some surprise shakeout? Keep in mind, we do have the midterm elections coming up on the 8th of November, and based on historic data for midterm election years for the stock market, it tends to be a green month, both in November and December. So unless we get some sort of black swan, hopefully we repeat that average historic data and we get a nice rally leading into Christmas for the next 1.5 months or 2 months. Now looking at Bitcoin, we did get a nice monthly close back above $20,000. So you can see over here, we closed the month at 20,498. So we're sitting right there, obviously, because the month has just started at 20.5K. So let's take a look at last month's prediction of October 1st, and then let me share with you my thoughts on what could lie ahead for this month. To sum up, in terms of just keeping it simple, for Bitcoin, we need a close back above the 50 monthly moving average, monthly close back above that at the least, which is 22,500 for us to start turning more bullish. Until that happens, there is risk to the downside, and I think the next logical level, if we break this level where we've currently been sitting on, this 18, 19,000, if we break that, I think the next logical target and support would be this fair value gap, somewhere between 10 and 14,000, and hopefully if that happens, then we get a quick recovery in the same way that we saw this in 2018, that within 6 months, maybe even less, we get a complete recovery back up, and maybe even then a continuation and the start of a new bull market if that happens. So basically last month we were at a similar level, and I was saying as long as we're below this 50 moving average, there is risk to the downside, and if we do break down below that level, it's always if this then that. So this is the level, it's holding a support, it holds a support until it breaks. If it breaks, well then the likely target is still probably going to be this around $10,000 to $14,000 level, in my opinion. Now, we had a bit of a green month last month, but it's still a small month. So we are still under this 50 moving average, which is important. There's basically 3 levels that I'm watching. It's a 3-day 50 moving average, which is currently about 21.3 thousand. Then we have this 50 monthly moving average, which is about 22.5. And then finally, we have the 200 week moving average, which is around 24,000. So if we can reclaim all of those, if we can get back above 24,000, in my opinion, that's when I start turning more medium-term bullish, when I think potentially the bottom is in and we could see a bunch more upside. Until those levels are reclaimed, though, we are still at risk where pretty much anything can happen. One bad announcement, one piece of bad news, one bad press conference from someone important could send the whole markets down. So we're still at a point where it's tricky. Okay, we are technically here below this 50 moving average, and we could see some more upside, and hopefully we will get that bounce in November and December. Hopefully we get a multi-week rally, like I've been saying, and that starts to get more interesting as soon as the 3-day 50 moving average gets reclaimed at about 21.3. We are still not there yet, but reclaim that. Then we have this on the monthly, and then we have the 200-week moving average at 24K. So technically, we could have a rally here as high as 24K, but if we don't reclaim that 24,000, there is still downside risk, and that risk becomes a lot more serious once we break below these lows that have been holding as support. So for me in the short term, and obviously this is a monthly video, so this takes a long time to develop, but if you're looking at the shorter time frame, the daily, the 4 hourly, the hourly, I'm looking at about 19.7 or 19.5 that needs to hold if the bulls want a chance of more upside. Okay, so as long as we can hold that, say 19.5, I think there's a chance we can rally here and potentially go back up to these highs about 24, 25,000. That is still possible, but I would like to see a monthly close back above this 50 moving average here on the monthly to be able to get more bullish in the medium term. Switching over to Ethereum before I share my thoughts on the charts today and for the month ahead, let's look back on what I said about it last month. So a quick recap of Ethereum just with numbers. We're looking for a bullish scenario with a monthly close back above $2,030. Until then, we have to wait and see, is the 50 moving average going to continue to provide support at around 1,220? If it does not, we probably retest the lows just under $900. And if that doesn't hold, we're probably looking at $300 to $500 on Ethereum. So last month I said if the 50 moving average does not hold and we break down, we're probably looking at a test of the lows or potentially even lower, $300 to $500. Now, what we did see is we saw the 50 moving average hold, and that is, again, it's always with trading, it is if this, then that. So we're looking at key levels. If the level holds, then we have a chance for more upside. If the level breaks, then we're looking at more downside, and you got to look at these key levels and be able to be flexible with your positioning and your thinking based on how the chart develops. Remember, it is probabilities, not certainties. So the 50 moving average did end up holding, which is basically also the 200-week moving average. Okay, so we're looking at the 50 monthly is basically the same as the 200 weekly. So what also happens is, of course, this level coincides with the previous all-time high over here. So between 1,000 and 1,400, that was obviously the wick candle bodies around about over here. But you can see this level is still providing support, just like the Bitcoin 2017 all-time high has been providing support around that $19,000 level. Now, what I see here is obviously we got a nice hold here for 2 months now already off the 50 monthly moving average. We're still above it. We got a nice sign of strength here, and that hopefully leads to bullish continuation. So as I've been sharing over the last couple of videos, I am leaning shorter term bullish because the charts are setting up that way in the lower time frames. But also, you know, we have the midterm elections, which historically, if there's no black swan event, would lead us to November and December being bullish for the stock markets, and thus likely also for Bitcoin and crypto. So my expectation now would be, again, the 50 moving average is the line in the sand. We need to hold that. So we could still see a pullback as low as the 50 moving average. $1,260 needs to hold as a line in the sand for the bulls. We break below there and the bears take over again, in my opinion. For now, I think upside could be there, and we could see potentially here the highs again back at 2,000 or maybe even as high as 2,300. And the reason why I say that is if you go to the weekly chart, it shows a little bit better. You can see the red here is the 200, and the target here at 2,300 is basically the 50-week moving average. It also coincides over here with the support over here earlier this year, and there's obviously a lot of activity here in this level too. So if we do get further upside continuation, anyone who's shorting it would likely take out these highs over here and potentially go to that 50-week moving average, which tends to happen once we break below the 50. The target tends to be the 200. Once the 200 holds, the target tends to be the 50. It happens to a lot like this. So I'm not saying that's going to happen this month right away. It could, but maybe it happens over the next 2 months or so. So we really want to see this hold, this level over here, around 1,260 to 1,340 as a line in the sand for the bulls. As long as that holds, hopefully we get that upside continuation and we target 2,000 to 2,300, hopefully this month, but maybe in the next 2 months. And then let me run you through the SPX and the Dow Jones Industrial Average real quick on the monthly charts, because these are obviously also important. If the stock market is going up, in general, crypto is going to follow, and vice versa. So now it's going to be very important. What are the stock markets going to do? And like I've already said multiple times, historically, the average in midterm election years is November and December to create a rally into Christmas. Okay, so is this year going to be different? Ultimately, time will tell. But what we're seeing here, so this is the monthly chart, the 50 simple moving average in blue, the 200 simple moving average in red, and you can see this is basically the 200 week moving average, similar thing. But once this 50 holds, we get nice rallies and continuations to the upside, and you can see going all the way back here to 2008. Once we're above the 50 monthly or the 200 weekly, we tend to be in bull market territory. So we need to hold this. Getting below there is bear market territory. So we break this, and the likely target could end up being the 200, which is obviously a repeat of 2008 and bear market territory, in the same way that it happened here in the past. You see, once we lost the 50, we tended to go to the 200 over there. And obviously the difference between then and now is that there's a much bigger gap between the 50 and the 200 due to the length of the bull market, and that means if we go to the 200, we go a lot lower. But you can see we bounced off this 50 monthly average, and that is a bullish sign. For now, the bulls have held, and the danger for the bear market has temporarily been relieved. Of course, that changes if we break back below that, but you can see we got a really nice reaction, a really nice bounce here off that 50, and we closed. It wasn't a weak bounce, it was a strong rally, and we closed near the top of that monthly candle. So now the question is going to be, which we're going to see this month, do we get the continuation to the upside? And for that, we obviously want to continue watching on the weekly chart, on the 3-day chart, and the daily chart for shorter term signals about confirmation of reversal or potential rejection. We want to see that as it happens in real time. So the only way to do that is to look at the shorter term time frames, which obviously I can't do in this video as it develops. But of course, if you follow me on Twitter or Instagram, I do provide those updates there. The links are in the description down below. That's free. And if you want to join me in our VIP Discord and community where there's daily updates and charts and stuff like that, it is the second link in the description down below. And that gives you more real-time updates. But look, what we're seeing now is we see this bounce. Do we get that continuation? And a key level is going to be about 4,200 here. If we can reclaim that, and again, the reason I'm saying that is if you look at the lower time frames, if we reclaim that, you can see over here, that is a 50-week moving average. If we can reclaim that and get a weekly close back above 4,200, then we're really back in potential bull market territory and potentially a run back to the all-time highs or new highs, a potential melt up if that happens. So keep an eye on that. That is important. But like I said, if we roll over and we go back down, we break below the 200 weekly moving average or the 50 monthly moving average, we break below that, and it is significant bear market 2008 repeat risk if that happens. So keep an eye on both those levels. And quickly, here is the Dow Jones Industrial Average. The reason why I'm showing this is they're both very important stock market indexes in the US, but the Dow Jones tends to lead. It tends to be a little bit ahead of the SPX. Similar thing, 50 moving average in blue, 200 in red, and it's key to hold this 50 as you can see over here. We hold this 50, we still have hope for the bulls, and of course then if we go into the weekly and we get back above the 50 weekly moving average, I'm showing you the monthly here, if we get above the 50 weekly moving average, it is very much bull market territory and potential for new all-time highs. Okay, so we can see very strong reaction over here. That was a nice bear trap, thinking that we could go as low as the 200 here, and this was obviously March 2020, but if we broke below this, there's some serious downside risk. We didn't, we got a little bear trap, massive rally to the upside, and a close right at the top of that candle, and I would say that's almost a bullish engulfing candle. You can see it almost completely swallows the previous red month, and this is a lot of strength. So again, we're going into the midterm elections. Historically, if there is no black swan, we are looking at further upside in November and December in the stock markets. If the stock markets go higher, then it's likely that Bitcoin and crypto don't have more downside pressure and probably also follow over there. So we are looking, again, keep an eye on this 50 monthly moving average, set an alert there. If we go below there, it is serious bear market potential territory for a lot lower. But as long as this holds, if we continue higher, we could be looking at a continuation. Even though the macro is bad, even though the interest rates are increasing, you know, markets are not rational a lot of the time. So we've had a lot of bearishness over this last year. Maybe this was it, and maybe we get one final leg up with a crazy melt up, like some people are predicting, where the whole market goes to new all-time highs, where everyone's expecting it to break down. They all FOMO back in, and then we get the real reversal and potential Great Depression down the line. But for now, we play the charts and we see how it develops. If the charts are showing us bullishness, you know, there's no point in being bearish if the charts are really showing the strength and if they are going to potentially continue higher. And we keep an eye on the weekly, on the lower time frames. Again, so the weekly helps you determine more quickly what the direction of the trend is, and of course the 3-day and the daily, they all then give you quicker confirmations. So what we're looking for is we're looking for the weekly to get a close back above the 50-week moving average here in blue. If it does that, again, we're looking at potential bull market territory here, new all-time highs for the Dow Jones. So set an alert at the 50. If we can close above that, it's good for the bulls. If we get back below the 200, it is really bad for the bulls, and we are looking at potentially much lower. And that is basically the if this then that scenario for the next 2 months. I am leaning towards, based on historic data, based on how the charts are looking, based on the previous monthly close, that we are going to get more upside in November and potentially in December. So let's see how that ends up playing out. If you enjoyed this video, make sure you are subscribed to the channel, click the notification bell, and I really appreciate it if you smash the thumbs up button, give it a like, because it helps it get out to more people. Share it on Twitter, Facebook, social media. You know, if this video was helpful to you, maybe it's helpful to other people, and they can profit or take better positions or lose less. And that is, of course, the goal, to all try and win more from these markets and extract more dollars into our bank accounts so that we can improve the lives for ourselves and of our loved ones. So thanks for watching, and I will see you in the next video.